Welcome everyone. Today we have a special guest, Patrick Noon, CPA, President and Founder of PJN Tax Solutions Group. Welcome, Patrick. Thank you for joining today. We're super excited to have you. And the reason, friends, why we brought in Patrick is because it is so critical for all of you to have your entity created. This is primarily for asset protection, tax benefits, and most importantly, funding. Okay, so Patrick, welcome, and the floor is yours.
Okay, thank you very much, Hugo. Just a little quick background on myself for everybody in attendance. Born and raised in Elmwood Park, just outside Chicago. Typical Irish Catholic family with 4 brothers, 3 sisters, 2 parents, and 1 bathroom in the whole house. And somehow we made it work. I don't think they build homes anymore with 1 bathroom. It's just my wife and I now. We have more bedrooms and more bathrooms and more TVs than we have people living here. So then I went on to graduate from DePaul University in downtown Chicago in 1981. I passed the CPA exam in 1983. So I've been doing taxes and accounting now for about 40 years. So I'm finally starting to get the hang of this and getting good at it. So Hugo asked me to come on today, especially for the newbies, people that are just starting out, choosing the proper business entity for your business. And depending upon whether you are a fix and flipper or you buy and hold income property or wholesaling, will have a pretty strong impact on what type of entity you decide to go with. Now, before I forget, if I go too far, this is what we call our entity comparison chart. It's a side-by-side comparison. It's only 2 pages long of all the different tax entities that the IRS recognizes. And if you would like, you can send me an email at the end of this presentation, and when I'm back in the office tomorrow, I'll be glad to send out a nice, clean, crisp copy to you.
In fact, Patrick, we're going to make it available right away for those people who stay towards the end of the webinar. I have it up on the screen. We'll send them the link to it as well. Okay,
very good. So we'll jump right in. There are 5 tax entities that the IRS recognizes, and the 5 are reading left to right on the attached entity comparison chart is sole proprietorship, partnership, C-Corp, S-Corp, or LLC, or limited liability company. So this handout that Hugo has is a nice side-by-side comparison because it talks about the good, the bad, and the ugly of each one. What's required, what's not, what are the benefits, what's the taxation. So I'll briefly touch on them. And again, my office is in St. Charles, Illinois, western suburb of Chicago. So if anybody has any questions after today's presentation, feel free to call me on my cell. Try to do it before 8 o'clock at night though, because the big boss at home doesn't like when I get phone calls after 8 o'clock at night that are business related. So my cell is 630-415-5296. Again, 630-415-5296. Or you can visit my website, which is pjntaxsolutions.com. But let's jump right in and start with entity number 1, sole proprietorship. So what a sole proprietorship is, it's an entity, a business entity that has not been incorporated, okay? It's the easiest of all the entities to create and get up and running fairly quickly. There's no formal agreement. There's no forms to fill out. A lot of people that have side jobs, side hustles, this is something that they most likely will run with. And what it is a sole proprietorship files Schedule C as part of your personal return. It doesn't file a separate tax return like an S-Corp or C-Corp or a partnership. It's just a part of your personal return. And The problem with it though is when you are a sole proprietor, you pay not only income tax, but you pay self-employment tax as well. And self-employment tax is an additional 15.3% on top of the income tax that you'll pay. So if you add, let's say you're in the minimum tax bracket, which is 10% for federal income tax purposes. You have 10% federal income tax, you have 15.3% self-employment. Now you're north of 25%, plus you got 5% to the state of Illinois, which, I mean, technically it's 4.95, but let's just round it to 5. You're at 30 cents on the dollar on the net income going towards taxes. So if I have clients that want to be sole proprietors, I try to talk them out of it as much as I can, but if they elect to do so, I tell them you need to probably keep back a good 30% of your net income or 25% of your gross income, just as a rule of thumb, so you don't get caught short at the end of the year and have a large balance due. Because if you do, then you need to hire my other entity, PJN Tax Solutions Group, to help you get out of hot water with the IRS. So a sole proprietor, again, there is no insulation from liability either with a sole proprietor. So God forbid you were to be sued, if you operate as a Schedule C, you have not only all of your business assets at risk, but also all of your personal assets as well, which could be devastating. I mean, if you have a judgment go against you in court and you don't have enough insurance to cover the judgment, then the plaintiff will start going through your business assets. And if their judgment is still not satisfied, then they'll go after your personal assets, which could be your house, your savings, your cars, your boat, anything personal. So that's another huge downfall from being a sole proprietor. Again, it's easy to set up and get running, but it has a lot of disadvantages. Again, unlimited liability and pretty heavy on taxation. A good 25 to 30% of the net income is going to go towards income taxes. The next entity over is partnerships. And obviously, to have a partnership, you need at least 2 people. And with a partnership files a separate form each year. It's called a Form 1065. And what it does is it reports the activity of the partnership, the income and loss. And whatever the net income or net loss of the partnership, it gets allocated to the individual partners. Say you're 50-50 or 70-30 or 60-40. Each partner picks up their respective share of the net income or loss, and it's reported to them on what's called Schedule K1. And on the Schedule K1, that then moves over and becomes a part of your personal return. The partnership itself does not pay federal income taxes. There will be a small replacement tax paid to the state of Illinois. But as far as federal, there's no taxes paid to the IRS by the partnership. Instead, the individual partners pick up their share of the net income or loss, and that's where the tax is paid at that level. There's different types of partnerships. There's limited partnerships and there's general partnerships. If you are a general partner in a partnership, you again have unlimited liability. If you are a limited partner in a limited partnership, you're only at risk to the amount of your investment, which does offer some protection. So again, that's basically, to have a partnership, you need at least 2 individuals in order to have a partnership. The next entity is C Corporation. And C Corporation, I mean, you can think of a C Corporation as like IBM or General Motors, Microsoft, or Amazon, or any of the big blue chip type companies. A C Corporation is a tax entity that stands on its own 2 feet and pays its own taxes. Okay, there is no flow through or pass through to the shareholders. The corporation itself pays their own income tax. And about 2 years ago, in 2018, Trump changed the corporate tax rate to a flat 21%. It used to be bracketed where you'd pay a certain amount on the first 50,000, then another percentage on the next 25,000, and you just keep bracket up to the next level. But when Trump came in, he said, you know, we're just going to have a flat across the board, 21% on $1 of net income. A C corporation files what's called Form 1120, and it's typically due April 15th. And if an extension is needed, it'll go to October 15th. With this crazy coronavirus, everything's changed. Some of it good, some of it bad. So maybe at the end, I can speak a little bit about that. But C corporation, again, you can be a single shareholder in a C corporation. You don't need more than yourself. And again, a C corporation stands on its own 2 feet, pays its own income tax, and it's a way to regulate, almost like turning a faucet on or off. You have more control over a C corporation than you do an S corporation. I have a client who is in the health insurance industry, and because of his age, he's limited as to how much he can earn before Social Security starts taking back $1 for every $2 that he goes over the limit. And so because of that, we went with a C corporation for him. So again, we could turn on and off like a faucet how much income was to be reported on his personal return. Obviously, whatever it does in his personal return stays on the C corporation return, and it pays taxes at that level. But again, it's, you know, it's easier to have control over a C corporation than, let's say, an S corporation, which is the next entity. An S corporation, it comes from its subchapter S of the Internal Revenue Code. That's where the name comes from, S corporation. And in an S corporation is what they call a pass-through entity, meaning that the entity itself, the corporation, does not pay federal income taxes to the IRS. Instead, what happens is the corporation, whatever the net income or net loss is, it moves over and becomes a part of the shareholder's personal return, again, via the K-1, just like the partnership, except this will be a K-1 from an S-Corp, and the individual shareholder pays the income tax on their share of the income, or if it's a loss, they can use it to offset other earned income. S corporation, again, you can be a single shareholder. I have 2 entities. I have my CPA firm, which prepares taxes, and my tax resolution firm, which helps get people out of hot water with the IRS. Both of those entities are S corps. So every year, you know, I'm always on extension because I'm too busy helping everybody else. But I have to do a S corp return for the CPA firm, another S corp for the resolution firm, and then my individual return as well. But what's nice about S corporation and C corp as well is you have this, it's almost like this shield of protection against losing all of your personal assets when you incorporate. I know Hugo is a big advocate of S corporations, and because it does 2 things. Number one, it insulates you from liability. If God forbid you were to be sued, you only have at risk your business assets. Personal assets are no longer at risk. And the big gain that everybody likes, the big advantage with an S corporation is that an S corporation does not pay self-employment tax on the K-1 income, okay? Remember in the beginning I said a sole proprietor pays income tax and a 15.3% self-employment tax. Well, with an S corporation, the K-1 is only subject to income tax. The IRS does like to see you take what's called a reasonable salary out of the S corp because they frown upon taxpayers that have 0 wages and then this big huge fat K-1. They know that you're trying to avoid self-employment tax. So we always recommend to our clients that they take some type of salary. But nobody knows what reasonable is. You know, it comes from the IRS, but there's no hard and fast percentage. It's not a dollar amount. Nobody really knows for sure. I've never had any problems with clients that say, okay, take half of the corporation's net income, put it on a W-2, and then the other half, leave it on the K-1. So if a guy, at the end of the year has net income, let's say of $100,000, we put 50,000 on a W-2, 50,000 stays on the K-1. We've never had any issues or red flags raised with the IRS, although nothing's guaranteed with the IRS. I think right now they have bigger fish to fry than to worry about, people like us who are just getting out and getting started. The last entity is an LLC. LLC stands for Limited Liability Company, and an LLC can be any of these previous entities that I spoke about. It could be a sole proprietor, it could be a partnership, it could be a C-Corp, an S-Corp. So when people, I ask people what type of tax entity they are, they say, well, I'm an LLC. Well, that really doesn't answer the question, because an LLC can take on any number of the previous entities. If an election is not made by the taxpayer when the LLC is created, by default, the IRS will regard it as what they call a single member LLC, or another name is a disregarded entity, meaning it's disregarded for, special or separate tax treatment. And when you are a single member LLC, you basically file Schedule C, okay, if you're in the fix and flip business, or you'll file Schedule E if you are in the rental, the buy and hold with rental property scenario. So depending upon which, what is your intent for being in business, will determine whether or not you file Schedule C or Schedule E if you don't elect to be recognized as either a partnership, an S-Corp, or a C-Corp. And again, it's an election form that your CPA should be able to prepare for you, letting the IRS know that you're making a special election to be recognized, again, as either a partnership, S-Corp, or C-Corp. If you don't make the election, well, then by default, you're Schedule C. Okay? An LLC, there's this thing in Illinois called a series LLC, which is something I think Hugo and maybe Andrew Holmes and Raul speak about. And what's nice about a series LLC is if you are in the business of acquiring rental properties, and let's say you have 3 properties, A, B, and C. If somebody slips and falls at property A, you don't want to have properties B and C to be at risk of a lawsuit. So what happens with a series LLC is each entity stands on its own 2 feet, and they are insulated from the other activities of the other entities. But what the beauty is you only have to file 1 tax return for all those entities. Because if you had to file multiple returns, it's probably, we charge $450 to $500 per business return. You'd hate to have 3 properties with, 3 separate, let's say, S corporations, and they would all have to file their own individual income tax return. If you are in a series LLC, only 1 tax return is filed, but yet all of the entities under that umbrella, they all are insulated from the liability or the actions of the other properties. That's kind of a lot of information to go through in a short period of time. But again, this handout from Hugo, it's a nice little side-by-side comparison. If, for some reason it comes through and it's not legible, feel free to email me or call me on my cell, and I'll be glad to send you out, a fresh, clean copy from my office. Do I have any more time left, Hugo, or am I done?
Yeah, you have more time, Patrick.
Oh, okay.
So
I just wanted to touch base real quick on some of the craziness that's been going on with this coronavirus. Everybody knows that the IRS pushed back not only the filing deadline, but the payment deadline as well on personal income tax returns, and basically all income tax returns that were due April 15th, they're now due July 15th. And the problem is originally when they did that, they said, tell you what, we're also going to push back the first estimated payment. First estimated payment is typically due April 15th for that current year. And the IRS said, well, we'll push it back to July 15th along with everything else. The problem is the second installment is always due June 15th. So for a while, they had the second installment being due before the first installment because the first installment moved to and behind the second installment, if any of that makes sense. That's how the government works. Well, now they've corrected it. And what they've now said is the first and the second installment of estimated taxes for 2020, the year we're in, are now both due on July 15th, which to me is stupid because who's going to have that kind of money to make two estimated payments at the exact same time? It kind of goes along with this mortgage forbearance that you've been hearing a lot about lately. To me, mortgage forbearance is going to lead to a lot of short sales, foreclosures, and REOs. I mean, if you're in the buy and hold, you should have a pretty healthy inventory to choose from, because a lot of people think forbearance is forgiveness, but it isn't. And I went through my mortgage company just to see if I could get it, and they said, yeah, that's, we'll give you 90 days, but after 90 days, we're either going to ask you to get current and pay everything, which would be 4 payments, which would be tough to swallow all at once, or they said we will allow you to play catch up over the next 12 months. Well, even if they allow you to play catch up, it's going to add a huge percentage to your monthly payment. I mean, if you follow the math on this example, let's say your monthly payment is $2,000 even. They let you slide for 3 months. Now you owe them $6,000 in arrears, and the 4th month rolls around, and they want 1/12 of the arrearage every month added to your current payment. So your current payment's $2,000, and now I got to give them 1/12 of the $6,000 that they let me slide on earlier. So 6,000 divided by 12 is $500. Now my new monthly payment for the next 12 months will be $2,500 per month, or a 25% increase. I don't know a lot of people that can handle a 25% increase in their monthly payment, which again, I believe will lead to a ton of properties coming on the market, not because they want to, but because they have to. They either have to get out, or it's a short sale, or it's a foreclosure. But I think you're going to see a lot of opportunity for real estate investors in the next, say, 4 to 6 months. Some other things about the coronavirus are these PPP loans and these EIDL loans. The PPP loans, which stands for Payroll Protection Program, that's something that you have to do through your banker. Because it's an SBA loan, which is Small Business Administration, it has to go through the bank. The applications have to be submitted by the bank. So if you're looking to do a PPP loan, the best place to have that done would be with your banker. The EIDL loan stands for Economic Injury Disaster Loan. That originally was going to be a $10,000 grant to all small businesses who asked for it. Well, it turns out that they were just buried with applications. They had no idea how many businesses were going to be applying for it. So they now said, okay, tell you what, instead of $10,000, it's going to be $1,000 per employee that you have. And so a lot of people are getting the EIDL grant, which is money you don't have to pay back, but it's $1,000 per employee. So if you're the only employee, then it's $1,000. And the funny thing is about this EIDL is originally it was like early April when everybody applied for it. And then they came out with an announcement that not a lot of people know about. So if you're out there, if you filed an application for an EIDL loan prior to April 4th, you have to refile because the original application has now been void and there's a new application in its place. So again, if you filed for an EIDL before April 4th, please redo it because nothing's coming while you're waiting unless you redo that. Stimulus checks, that's the $1,200 per person. I read an article this morning that they're going to ask for another $2,000 per person in May. I don't know if that will go through Congress or not. But right now, the $1,200. My wife, she got hers via direct deposit. Mine is supposed to come via direct deposit. Still waiting for it. Haven't seen anything. And there's a lot of my clients that email or text me every day saying, every time I go on the IRS's website, it says they can't find my information. And that's because I think the IRS got into this way too quick without thinking it through all the way. And because of that, I tell my clients, just keep trying to get the direct deposit. And if for some reason you cannot get through, you can always expect a paper check in the mail. Again, for a single individual, single taxpayer, they'll get the full stimulus of $1,200. If your AGI, which stands for adjusted gross income, if your AGI is below 75,000 on either your 2019 or your 2018 return. If you filed for 19, the IRS will look to that return to determine how much of a stimulus payment you get. If you haven't filed 19 yet, like me, then they'll look to your 18 return as far as determining the amount of your stimulus payment. But again, if you have trouble with the website, fear not, you'll still get a paper check in the mail. And I don't know, I think that's about it. I mean, it's a beautiful day outside today. I'm sure you don't want to be sitting inside listening to me talking about taxes. It's a beautiful Sunday afternoon. Again, my office is in St. Charles, and my phone number, my cell, which is with me all the time, 630-415-5296. And somebody put up a message here, what is the cost to open an entity? There's a couple of different ways you can do that. You can either go to LegalZoom, which is the least costly way, or you can, I'm sure Hugo has
Yes.
individuals that he can refer to you, attorneys. And I always think it's better to use a professional than to try to save a couple dollars. I mean, even when I meet with clients and I talk to them about, how we're going to get the IRS off of their ASS, that's our company tagline. And if I go through my presentation and they say, well, I think I can do what you do. And I say, you know what, maybe you could. And if you had a good pair of needle nose pliers, you could probably pull your own teeth out too. But wouldn't it be better to go to a dentist than trying to do it on your own?
Absolutely. There's another question on the chat. How is the tax structure, and when and how are taxes due for LLCs in comparison to S-Corp? Loss of 9K instantly.
Well, again, an LLC, it can be an S-Corp, an LLC, if you make the election. I believe it's on Form 8832. But S-Corp and partnership returns are due, they are due March 15th, typically, in a typical year. C corporations and 1040s are due April 15th. And depending, if you're not ready to go either with the March 15th filing deadline or the April 15th, you can always get a 6-month extension. That will take you to September 15th for an S-Corp or a partnership, or you can go to October 15th for a C corporation or an individual return.
Okay, there's another question. EIDL/advances are all closed for new applications. Patrick, can you clarify as to new application you can put in?
Again, this is a very fluid situation. It seems to be changing daily. And if it is currently closed, I know I've had clients just within the past week apply. So if it's closed now, it may reopen. But again, I would go to the SBA website, sba.gov, I believe it is, and follow the instructions there as far as applying for it. Right now, the PPP was out of money. They refunded it, and the banks are now taking PPP applications again. And I'm assuming that if the same thing happened with the EIDL, that they would do that again. Because again, the EIDL was originally supposed to be $10,000 per business as a grant, meaning you don't have to pay it back. And again, because of the tsunami of applications, it's now down to just $1,000 per employee.
Okay, so there's another question. If someone is a full-time salaried employee but dabbles in real estate, is there a rule of thumb for which of the 5 entities to use? Yes, I'll cover that in just a second. You had a second question, Joseph?
I'll let Hugo elaborate on this, but when a client says to me, oh, I don't make enough money to be a corporation, I typically tell them that is not the right way to look at it. And Hugo will tell you this, the right way to look at it is asking yourself, how much can I afford to lose?
Right. And then the second question is, if someone invests in real estate full-time, which of the 5 would you recommend? Okay, so I can cover these right now.
Sure.
So first of all, friends, it is very difficult, and this is one of the things that I found investors make a mistake, that they try to become accountants, right? You don't need to. That is why we're making the experts like Patrick available to you, okay? So you don't need to read tax law, none of that stuff, because it is very complex and it changes on a daily basis. So I'm just gonna tell you the rule of thumb, because this is what I like, right? I like simplicity. The most sophisticated thing is simplicity in real estate and in life. So I'm gonna tell you just the rule of thumb. If whether you're a newbie, part-time, full-time, you have to have an entity created, okay? For the 3 reasons that I gave you. Number 1, asset protection. What that means is, if you have real estate and somebody sues you because they fell or something happened, then you need to be protected, right? Your personal assets. That's one of the benefits by putting a property in an LLC or an entity overall, S-Corp, C-Corp. Let me just quickly give you the example of the collapse of the porch in Chicago about 10 years ago. A lot of people died, right? Over 10 people. The owner had that building in an LLC. He ended up losing the building, but guess what? The owner still owed more property, real estate, and they were protected. Why? Because they were in separate entities, okay? So they were not touched. On top of that, the owner had an umbrella policy, okay, which is so critical for all of you to have, because if the lawsuits surpass your asset protection within the entity, guess what? The umbrella policy is gonna kick in. It's very inexpensive. You can get up to, let's say, 5 million for less than 150 a year. So it's just so inexpensive and so critical for you to have, so you have peace of mind. So one of the reasons, again, is asset protection. The second reason is for tax purposes. And the biggest tax advantage that you have when you're in real estate is depreciation. Okay, that is just by far, in my opinion, the best tax benefit. And the third reason is for funding reasons. For you to get money from hard money lenders, private money lenders, the reason why is because banks want to lend on an entity, because if you default, they're going to take over the property or foreclose on the property in less than 6 months. However, if they lend you money in your personal name, guess what? The foreclosure process on an individual can take up to 2 years. Does that make sense? So that is why when they lend money, they're going to immediately ask you for your entity, okay? They don't want to lend money on your personal name. I'm talking about primarily hard money lenders, private money lenders, asset-based lenders, which are the ones that we should be using to buy distressed properties. Okay, so those are the three basic reasons why. Now, what type of entity should you create? You need to create, this is the rule of thumb. If you are a single individual, create an S-Corp, okay? If you are two or more, then create an LLC. It is that simple. As Patrick said, stay away from sole proprietorship or from C-Corps, okay? If you're a single individual, S-Corp, two or more, LLCs. Whether you are doing flips, wholesales, or buy and hold, okay? It does not matter. So in fact, we have both. We have S-Corp and LLC. That's all we do. We don't do C-Corps or partnerships or sole proprietorships, okay? If we're gonna partner up with another individual, we do a joint venture agreement, okay? With our S-Corp or our LLC. It is that simple. So I'm gonna repeat this again. If you're a single investor, just yourself, create an S-Corp. If it's you and your wife, or you and your brother or your partner, then create an LLC. Now, there was another question. How do you create that entity? There are three websites that I really like. My favorite one, I'm gonna tell you, I just pulled them up by priority. So LegalZoom is my favorite website. They have different packages, but it's about $3 all the way to $600 to create an entity. And that's going to include, it depends how much you want them to do for you. If you want your articles of incorporation, your bylaws, all the documents that are required, they're going to be on the higher end, but it's not going to be more than 600. Also, if you want an expedite service, because they can create your entity in 2 days, okay? So you're going to pay 100 more for an expedite service. The second favorite website that you can look at is inkfile.com, okay? And they all charge about the same, but they can do it very efficiently, okay? And the third favorite is Swift, okay? So what I'm gonna do is, I'm gonna put in this on the chat for all of you to have. So I'm gonna send, this is my number one option. This is my second best, Inkfile. And then my third option would be Swift, okay? And again, you're gonna spend about $500–600. So as Patrick said, whether you're a newbie or not, you have to have an entity, okay? It's not optional. You do have to have. In fact, in DealVault, if you want to buy properties from the bank directly, REOs, you have to have an entity. If you don't have an entity, we won't even give you access to the inventory. So it is so critical for you to do, and this can take up to 2 days or so to have it all set up and ready, okay? Now, there's another question. I think this might be for you, Patrick. LLC income is reported through K1 on 1040, according to your share of LLCs. So this is for us.
Yes. Before I answer that, before I forget, as a follow-up to what Hugo just said about creating a separate entity, once you do that, you then need to go to the bank and you need to create a separate checking account for the business, and you need to have a separate checking account for each buy and hold property that you have, okay, and also have a separate credit card designated for business purchases, because if you don't, then you do what the IRS calls commingling. In other words, mixing together your business and your personal activity, and the two need to be separate, okay? You need to keep those separate and apart from each other. As an example, if you need to buy materials or something, equipment for the business, do not write a check out of your personal account to pay for that, let's say that new computer. Don't write a check to Best Buy out of your personal account to pay for the computer. What you should do instead is write a check from your personal account to your new business entity, okay, and that'll be treated as a loan or maybe as shareholder equity on your part, and then the company writes the check to Best Buy because the computer is going to be used for the company, so the company should be writing the check. Don't try to, I know it's quicker and it's easier just to shortcut it, but if you do that, you might be opening up, you know, a lot more questions in an IRS audit. So again, treat each, you know, entity separate. When your rents come in from your rental properties, deposit them into the company checking account or the property's checking account, and then, you know, write the mortgage payment, the homeowners association fees, the real estate taxes, utilities, whatever, write them out of the company checking account. Don't write them out of your personal account. And with regards to S corporation K1s, and again, an S corporation can be an LLC, and the individual shareholders in the S corporation pick up their respective percentage of the income or loss, and it moves over and gets reported on the individual shareholders' personal returns. Because again, an S corporation does not pay they do not pay income tax. Again, it moves over and becomes a part of the shareholders' individual return. But be aware though, and I've had a lot of people make this mistake, they have not filed S corporation returns due to inactivity. Big mistake. Because when you register the S corporation with the IRS, they're going to be looking for a return every year. And if you don't give them a return, even a return that says no activity, the penalty is $200 per shareholder per month, up to a maximum of 12 months. So $2,400 for every shareholder that you're late, even though the S Corp itself isn't responsible for taxes. So once you create it, make sure you file returns every year. Otherwise, that non-filing penalty, it can add up quickly.
Perfect. Now there's another question. Can you have a series for multiple properties if an S Corp is created?
Well, that's the whole thing behind the series LLC. To create an LLC in the state of Illinois, I think right now is $150 with the Secretary of State. They're closed right now, but you might still be able to do it, you know, over the internet. If you want to create a series LLC, I think it's $400 is the charge, but that gives you the ability to place individual properties, or they're called cells, to place them under the heading of, you know, the parent company, if you will. So that's the whole thing behind the series LLC. You want to have the properties separate and apart from each other, so that if God forbid, like Hugo said, if you're sued on property A, properties B, C, and D are not at risk because they have nothing to do with A. Everybody stands on their own 2 feet. Okay, but you don't want to pay me to file a return for A, a return for B, a return for C, because again, our minimum fee is like $450, $500 to do a business return. So it would be better if we took all the properties and reported them all, even though they each have their own separate checking account, their own separate credit card, report them all on one return. And that way you only pay me once to do all of those properties. Great point. And I would like to add more on what Patrick mentioned. Friends, one of the confusion, and not only that, but mistake that many investors make is that for every property, they create an entity. That's not how you do it. It is driven by equity. So what it means is that, let's assume that you bought a property for $100,000 and you put 10,000, meaning 10% down. Okay, so you're going to put that in an LLC or S-Corp. If you buy a second property and you only have, again, 10% down, so combined for the two properties, you have a total of 20,000 in equity. Okay, let's just keep it that simple. So you're not going to have two separate S-Corp. No, you're going to be stacking up properties in a single entity until you reach about $500,000 in equity. Okay, that is the rule of thumb.
So because otherwise you're just going to be creating a lot of overhead and unnecessary expenses for you. Why? Because there's no point in protecting $10,000 of equity in a single entity. Therefore, you need to stack up the properties into a single entity until you reach about 500,000 in equity. And keep in mind that over time, your mortgage monetization program, you're going to have more equity in every single property, the appreciating value. So over time, you're going to see your net worth going up. So you just need to monitor. Once you believe you hit about $500,000 in equity, then you need to start putting those properties or moving those into a new entity. Okay, I just wanted to make that clear because I've seen a lot of investors create separate entities for every single property. You don't need to. Okay. So there's another question. If I have a new S-Corp, what are the chances to get funded with everything that's going on today? I can take on that. That's, in fact, Adrian, I have great news for you. If you're a DealVault member, or for those who are DealVault members, we have put together a list of at least no less than 10 Harmony lenders, asset-based, who are actively lending in this crisis, okay? No less than 10. So please send us an email to support@ChicagoDealVault.com. We're gonna send you a list. We just put that together last week, and we wanna make sure that all of you in Chicago DealVault have that available. It's about 10 or so, okay? Let me see, there's another question. What banks would you recommend for business account? My favorite is Bank of America. My second favorite is Chase. Do you have a preference, Patrick, as to which banks?
No, the majority of our clients have Chase. I've seen their bank routing number so much I haven't memorized. I don't even need to look it up.
Oh, okay.
I'm with BMO Harris only because it's close to my office.
Oh, okay.
So a lot of it depends on proximity. Fifth Third Bank is in St. Charles as well. So I would go to the one that has the lowest fees and they don't nickel and dime you to death on everything you want to do.
Right. I'm going to tell you, I love Bank of America for all our banking, personal and business, and even for particularly business credit cards. I mean, they have extended our line of credit tremendously, over 100,000. Okay, so it's just insane. And you know, they just don't ask for tax returns. They don't ask questions, all right? So I love Bank of America, okay? They're able to waive fees, disputes, they're just amazing. Also, for business credit cards, American Express, it's also by far one of the best, if not the best, for business credit cards. And in fact, friends, now that I'm talking about business cards, when you set up an entity, this third thing that you need to do after you create a business checking account, please apply for business credit cards. And send us an email. We're going to give you a list of every bank with their website and phone number so you can apply for business credit cards. It's just like a regular credit card, but it's business. And the cool thing about that is that it does not impact your FICO score. So you can use that business credit card and it does not affect your FICO. Even if you max out your limit, it does not impact your personal credit. It will impact your personal credit if you miss a payment and you're late, then it's going to go back to your personal FICO score, okay? But other than that, it's just incredible. We love business credit cards. But when we have a topic on funding, I'm going to cover more on that. But right now, this is part of the basics. Create an entity, either S-Corp for a single investor, or if you're a 2 or more, LLC. Once you have that, go to Bank of America, Chase, your favorite bank, and then apply for a business checking account. And third, apply for business credit cards. Okay, we're gonna give you the banks and contact information so that you don't pay a third-party company to apply on your behalf. Because guess what? They're gonna charge you 10% of the business credit line that you get. Like in our case, we got 6 or 7 business credit cards, totaling $40,000 in business credit. Guess what? We had to pay $4,000 to this third-party company. All they did was apply online for business credit on our behalf. I was not happy. So I don't want you to go through that. We're going to give you the best banks and information for you to apply for business credit cards. Okay. There's another question. If I heard correctly, did Patrick state that we need a checking account for each property, or do we just need one for each LLC?
In my opinion, it would be cleaner and easier for your CPA at the end of the year to do your tax return if each property had their own checking account and credit card, because then it would just be, you wouldn't have to dissect, you know, if you had 2 or 3 properties using one checking account, how much rent goes to property A, how much to B, how much to C, same thing with the expenses. If you can, you know, there's accounting programs out there like QuickBooks. You could set up a set of books for each buy and hold. And then at the end of the year, you go to your accountant and you say, here's the P&L, profit and loss, and make a tax return out of it. That way, all of the activity for just that property is in those financial statements. There's no allocating that needs to be done between 2, 3, or 4 properties. So that's why I'm a big advocate of having each property have its own checking account, and there should be 12 deposits a year, which is 1 deposit per month for rent, and then, you know, maybe 4 or 5 checks a month, you know, for mortgage and utilities and real estate taxes, and maybe a little bit of repairs and maintenance. But, you know, it should be very limited activity. It's just so much easier to account for if everybody's separate and treated like separate businesses.
Okay, great point. And in fact, that's how we do it. For every property, we have a checking account, just as Patrick mentioned. For accounting purposes, it just works amazing, right? So you just download all the transactions for the quarter, for the year, and it's just so simple. Let's say we're going to pay a contractor who went out to one of the properties. We just do a Zelle payment, quick pay, from a given account, right? So for accounting purposes, it's way better to have a single checking account per property, okay? But again, you need to have those checking accounts under the same entity, okay? Whether S-Corp, LLC. So they're all under the same entity. But you can have multiple checking accounts for every entity and for each property. Does that make sense?
Correct.
So yeah, thank you, Patrick. Great point. Adrian said, you know, I've heard bad things about Bank of America. Yeah, I don't blame you. But my personal opinion, they've been amazing. Okay, so it's just, we've had a lot of success with Bank of America. Then another question is, how is LLC income taxed?
That's kind of a difficult question to answer quickly. So first of all, is the LLC a single member or a disregarded entity? If it is, then it files one of 2 schedules, either Schedule C if it does fix and flips, or files Schedule E if the LLC buys and holds rental properties. So that would be step 1. Step 2 is if the LLC is not a disregarded entity or a single member LLC, then the question is, well, is it a partnership, an S-Corp, or a C-Corp? Okay, and if it's a partnership or an S-Corp, those 2 entities issue K-1s to the individual partners and shareholders for them to report their share of the income or loss on their personal return. If the LLC is a C corporation, the C corporation, again, pays its own income taxes at a flat rate of 21% from $1. So I'm sure that explanation was as clear as mud. So if you want, you know, feel free to give me a call. You know, we can talk about it more tomorrow when I'm back at the office.
Okay, perfect. And then there's one more question. I have Bank of America and Bank of America set up with ADP to give me salary check and subtract my federal and Illinois taxes. If I hire employees, they send checks to hire employees. So it seems like Bank of America has a great system. So yeah, I'm in favor of Bank of America for sure. But I mean, I also use Chase, so Chase is my second best option. And by the way, friends, the document that Patrick made available to us, I just shared that via the chat. So I'm gonna send this link again, so you all can go over the main differences between each of the entities. Okay, so I just send that link again for everyone to have. Are there any other questions? If no further questions, I would like to quickly summarize everything we talked about. So we talked about the different entity types. And as a rule of thumb, if it's only yourself, do an S-Corp. Avoid C-Corp due to double taxation. And if it's you and your partner, you and your spouse, and you're create an LLC. And then once you create your entity, you can use LegalZoom. That's my first option. Inkfile.com is my second best option. And my third best option is Swift filings, okay? Once you create these, you can get it done in less than a week, okay? The next step is to go to your favorite bank and create a business checking account. And the third thing that you need to do is apply for business credit cards. Please send us an email and we are gonna send you the bank information, phone number, websites where you can apply for business credit card. That is just the basics, okay? And also, keep in mind, ideally, you have for every property a checking account, okay? And also, you're gonna stack up your properties in one entity until you reach $500,000. Once you go over that amount, then you start putting the properties into a new entity. So that's just a quick summary of what we talked about. Also, if you want to get in touch with Patrick, Patrick, can you repeat your phone number, and then I'm gonna type it into the chat so everyone has your contact information. What's
Sure.
your chat? I mean,
My
your
cell phone.
phone
My
number.
cell phone number is 630-415-5296. We do answer the phone on the weekends as well. I was at the office this morning meeting with clients, and I have meetings scheduled for later today as well. So we're still here, you know, pretty much 7 days a week. 630-415-5296. My website is PJN Tax Solutions, plural with an S on the end, pjntaxsolutions.com. And I just want to follow up real quick with one last comment as a follow-up to what Hugo just said about going to the bank. When you go to the bank, make sure you bring with you two things. One, your tax ID number, the confirmation letter that you received from the IRS. And number two, the articles of incorporation, if you created a corp, or the articles of agreement, if you created an LLC. Because when you go to the bank and you say, I'd like to open up a corporate checking account, the banker's going to say, I need to see the tax ID number, and I need to see the articles of incorporation or articles of agreement. So just, it'll save you a trip from having to go back to the bank again. So make sure you have those two documents with you, and then lay them on the desk, and that should be all they need to open up a corporate checking account.
Perfect. Patrick, could you please type in on the chat your website?
All right. You're asking me to do something
Or
technological.
you can give it to me. I'll type it in.
No, I got it. I got it.
You got it?
I think so. Got it?
Okay, perfect.
Okay.
pjntaxsolutions.com. So make sure that you connect with Patrick. And friends, please do me a favor. Don't try to become a tax expert or a legal advisor. You're in the business of real estate. You're going to be making money only when you engage in three activities: making offers, talking to sellers, and talking to owners. Anything else that you do is sort of overhead because you're not going to be making any money. However, you need to have this foundation, these basics. So please use the experts. Get in touch with Patrick, and then check out LegalZoom or Inkfile, or Swift. Okay, those are my three favorite ones. Create your entity. If you don't have one, create a checking account and then start applying for business credit cards. Okay. So I want to thank you, Patrick, for joining today. Please, everyone, give a big round of applause to Patrick. Thank you for your incredible information today.
No problem. We'll talk to you soon. Thanks again, Hugo.
Thank you, Patrick.
Bye-bye.
Bye-bye. Friends, so I want to tell you about two new events, actually three new events that we're putting together. We're going to start doing virtual tours. Okay, you heard me right. So with new technology, I'm going to be able to share my screen and do a virtual tour of a property. And then we're going to do an analysis, whether it's a good deal or a bad deal. Okay, so we're going to start to do that. I'm going to push for an event next Wednesday. So stay tuned. Another cool event that we're going to run is to flip or to rent. Okay, so we created a spreadsheet. It's a really cool spreadsheet analysis. So it's pretty much a framework that we're going to give you, so simple that it's going to give you the answer whether you need to flip or to rent. Okay, so that's coming up very soon. And then the most important event that we're going to run is on May 31st. So it's a boot camp. We've never done this before. May 31st is going to be a 4-hour event, okay? Because we're going to be giving you A through Z blueprint, how you can achieve not only that financial freedom, but freedom of time, okay? So this is what we're going to give you on that event. We're going to be covering primarily all three exit strategies that you have in real estate: wholesale, fix and flip, and buy and hold. Okay, so this is what we're going to cover in this event. So, snapshot of wholesaling, basics of wholesaling, creating your motivated seller list, marketing strategies. We're going to be giving you scripts to do cold calling, how to track your leads. We're going to give you access to a CRM, making an appointment a success, closing practices. We're going to be covering virtual wholesaling, and then we're going to be covering fix and flips. Okay, so killer negotiation tips, funding tips for fix and flips, identifying the best flipping markets, and then how to get reliable contractors under your belt. We're going to go over the rehab estimate. We're going to go over the breakdown of the rehabbing process, as well as how to fill out the scope of work. Okay, and understand flip spreads. This is so critical. This is where many investors make a huge mistake, and that is why we created this spreadsheet, right? That is going to tell you flip or rent. It's so amazing. You'll be blown away. And then we're going to go over some of the mistakes that people make. And then most importantly, we're going to be talking about rentals, how to build a $1 million empire, how to create that passive income that we all need. Have your marketing team. We're gonna also talk about how to get virtual assistants working for you, and in fact we're gonna make our VAs available to you on that day. How to find hidden deals with the best profit margins, and most importantly, how to present your deals to get funded. So this is what we're going to do today. I want to make sure that you RSVP, because we're only going to have 100 seats for this event. That's it. Okay, no more. We're going to limit it to 100. So when you RSVP, this is what we're going to give you. If you don't have access to DealVault, we're going to give it to you for free for the next 30 days. We're going to train you unlimited, because we want to make sure that you are just ready to go by May 31st. We're going to give you a list of the great off-market deals, because we have 3 full-time people. All they do is find great off-market deals. So we're going to make this list available to you when you RSVP. Not only that, but we're going to give you a list of the top 10 rental and flip markets, okay? So that you start thinking about where you're going to be investing. We're going to do free training for your VAs. And most importantly, we want to make sure that you track all your leads. Okay, so we're going to give you access to our proprietary CRM, 30 days for free. This is all for you when you RSVP. That's simple. We want to make sure that the first 100 people have all these benefits. That's it. And then how do you sign up? Okay, so go to our meetup event. So I'm going to put this link on the chat right now for everyone to RSVP if you have not RSVP. So right here, so this is our meetup. Make sure that you go to the bootcamp. Okay, so we just created this. We opened this up for you to sign up. It's going to be May 31st. So I'm going to send you the direct link. I want to make sure that all of you are RSVP for this and you all will get these benefits. So make sure that you RSVP. Only the first 100 RSVPs will be able to join. And then if you don't have access to DealVault yet, we're going to give it to you for free. So we're going to give you a promo code for you to get DealVault. In DealVault, you're going to have access to leads, contracts, cash buyers, private money lenders, all are resources. So I want to make sure that you all leverage from it. Let me click on the link again so that you have access to DealVault. But step number 1, RSVP, okay? Step number 2, I'm gonna take you to the sign up page. Okay, so I'm gonna send this via the chat. This is the form that you need to fill out to get the free 30-day trial. Okay, and as in the PowerPoint, you are going to put in the promo code here. Promo code is going to be cash flow. And the package special Chicago DealVault. So I'm gonna put that into the chat. So package special Chicago DealVault, and then promo code is cash flow. Okay, so get DealVault for free, and then we're gonna email you the benefits that I mentioned earlier. So again, when you sign up, you are going to get all these benefits, okay? Again, 30-day free trial. We're gonna give you the list of the hot markets that we're coming up with. It's just a list of deals with over 75,000 profit spread. We're gonna give you the top rental and flip markets. If you have VAs, we're gonna be able to train them for free or train you unlimited until May 31st. We wanna make sure that you're ready to go for this event. And then we're gonna give you a 30-day free trial for our CRM, okay? So if you're already a member, please send us an email, an RSVP, okay? So that you start getting the list of great off-market deals that we're coming up with. And in fact, you can, we're gonna ask you for the areas that you're interested in. So we are going to send you the hot off-market deals for the areas that you're interested in. And we're gonna make sure that you have access to the top flip and rental markets. So friends, thank you very much for joining today.